Morning traders, today is February the 15th, 2021. My name is Neville Hornsey, I'm a market analyst for YouTrading, and today I'm going to discuss a few of the themes going forward into this trading week. Trading volumes are expected to be light as the two largest economies are on holiday today. Today is North America's President's Day, and we're also in Chinese Lunar New Year until the end of February. Equity markets were rising last week. And if we turn to the charts, we can see that the Nasdaq ended at all-time highs and has gapped open higher today so far, as well as the German DAX that made new all-time highs last week and is currently trading higher today, along with other European bourses also trading green. Inflation expectations have continued to rise as the reflation trades are being bet on, so we should keep an eye on real yields and a possible corrective dollar rally, as that may lead to adjustments in monetary policies in the months ahead. Moving on to the US dollar, the dollar index has tested and held above key support, and it also remains below the 50-day moving average. The macro themes of a large trade deficit and ever increasing fiscal deficit will weigh on this US dollar for the foreseeable future, leaving a change in monetary policy or a macroeconomic event that leads traders to seek the greenback as a safe haven as the next main reason for a major reversal. If inflation data were to roll over and go against the expectations, then we might actually see another move higher in the US dollar. The economic calendar, as I said, is pretty light this week, but some key points that we should be aware of are tomorrow's German ZEW Economic Sentiment Index and Japan's trade balance data. On Wednesday, we've also got US retail sales and their important FOMC meeting minutes. So we should be aware that trading might go a little bit slower towards the meeting minutes. But we've also got the UK inflation data, which should affect the British pound. With a weak US dollar and any news of lockdown restrictions being lifted, we should see further gains in cable. And we can see that cable itself is looking like it wants to target 2018 highs and has undone all of the COVID-19 crash. And now we're looking to see if we can get back into prices not seen since the start of Brexit. A weaker US dollar has been great for crude, and that has undone all of the price action since the Russian Saudi price war back in 2020. We're looking like we're going to be targeting the high of 65.62. Looks to be a key resistance level to look out for. Other reflation trades have been the copper chart here. As you can see, China has had a great year of manufacturing and their GDP was up last year, and that has resulted in higher copper prices. Commodity-based economies like the Australian and New Zealand economies are showing that the Aussie and the Kiwi are also benefiting from reflation trades and a weaker US dollar. And the Canadian dollar versus the US dollar is showing how the rise in crude has also benefited the Canadian dollar. As I said, this week's price action is going to start off slow, so best to wait for the key moments in the week before making a trade. And we'll try and keep you up to date with any major events as they happen. Okay, stay safe and trade well.